Imagine applying for a mortgage next year and discovering a hidden fee just doubled overnight. That's exactly what's happening in 2026 as FICO quietly doubles the price of your mortgage credit score from 95 cents to $10 per pull. And Senator Josh Hawley just launched a major investigation into why. Here's the bombshell that broke this week. FICO, the company behind the credit scores that determine your mortgage approval and interest rate, is doubling what they charge lenders for each mortgage score pull. Starting in 2026, the price jumps from 95 cents to $10. That's a 1,000% increase overnight. Now you might be thinking, that's just a corporate pricing story. What does it have to do with me? Here's the reality check. Mortgage lenders don't eat these costs. They pass them directly to you, the borrower. Every time your credit gets pulled during the mortgage process, that $10 fee gets added to your closing costs. Let's do the math. A typical mortgage application involves 3 credit pulls: initial pre-approval, final underwriting, and sometimes a third verification. That's $30 in new FICO fees alone. But here's where it gets worse. Lenders often pull scores from all 3 bureaus. That's 9 pulls total, or $90 in new fees just for your credit scores. And that's just for one applicant. If you're applying with a co-borrower, double those numbers. We're talking about $180 in pure FICO fees that didn't exist before. In a market where every dollar counts toward your down payment or closing costs, this is a significant new burden for homebuyers. This is why Senator Josh Hawley launched a formal investigation on March 25th, 2026. He's demanding answers from FICO about why they're doubling prices during a housing affordability crisis. The investigation could lead to regulatory action or even legislation to protect consumers. But here's what you need to know right now. This price increase applies specifically to mortgage scores, not the regular FICO scores you check for free. Mortgage scores use different formulas and are more expensive to calculate. FICO claims the increase reflects enhanced analytics and increased accuracy, but critics say it's pure profit-taking. So what can you do to protect yourself? First, understand that timing matters. If you're planning to buy in 2026, try to get all your credit pulls done before the price increase takes effect. Work with lenders who are transparent about their fee structure and ask specifically about credit score charges. Second, consider alternative scoring models. Some lenders are starting to accept Vantage Score for mortgages, which might be cheaper. Third, consolidate your credit pulls. Ask lenders if they can use a single pull for multiple purposes or if they'll accept older pulls within a certain time frame. Most importantly, don't let this scare you away from the market. Knowledge is power. By understanding these fees up front, you can budget for them and negotiate where possible. The average mortgage in America is over $400,000. $90 in fees might seem small, but it's your money and every dollar counts. So what's your take on this FICO price hike? Are you planning to buy a home in 2026, and how will this affect your plans? Drop your thoughts in the comments below. I read every single one.